Hello, everybody. We're here for Ticker Talk today. It's Wednesday, September 14th. We're going to take a look at the markets and see if there's any setups. We'll talk about what's been going on this week. It's been kind of a crazy week, right? So we'll get right into this here. I'm going to start with our disclaimer, as always. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, not to be considered advice to buy or sell any security, and all trading and investment decisions are your own and done at your own risk. All right, so get that out of the way. I think we all know who I am, so we'll just blast right through that. So yeah, we'll start out by taking a look at the market before we get into your tickers. But we're going to start with the major indices. Then we'll move on. We'll look at the VIX, the volatility index. We'll look at the 10-year yield. We'll look at the dollar index. You know, these things, these three I just mentioned, are really kind of driving the market lately to a large degree. Then we'll look at some of the sectors. A lot of the sectors are just messy now. Yesterday did a lot of damage to a lot of charts, and the whole thing is just starting to look messy. So we won't look at all of them. We'll look at some of the more important ones, and then we'll see if there's any setups. So why don't we get right into it? So I've got here a chart of Celsius. We'll look at Celsius later. We'll start with the SPY ETF, the S&P 500, and let's zoom in on this. Get a little bit of a closer look so we can see what's going on. Okay, so you can see this big red bar with the big gap is yesterday, and then today is this little indecisive looking candle. So first of all, we need to make some adjustments from where we were on the weekend. It's now time to adjust this trend line a little bit. We'll adjust that down. It still works nicely in there, and you can see that once, you know, when we anchor it to here, even today, it came right to that trend line, which was almost, you know, and as well was what, 291-ish, and bounced from there. And you can see there's still, you know, this strong support underneath that, and we've got the 618 Fibonacci retracement of the rally is right there. So that's a very logical place for the market to bounce. Now, this gap has been filled, but I'm just going to recycle that and move that over now to show this gap. So we filled one gap, and we've got a large gap, you know, that we got yesterday on that big gap down, and then so obviously we've got a lot of work still to do in this SPY. It's great that this bounced today. That it actually, you know, all the indices closed green today. SPY was up what, 0.4%. The Qs were up twice that much, 0.8%, and the Russell also up 0.4%. So, but you know, just looking at this candle here, this doesn't really tell the whole story, and it doesn't actually look that bullish. But I think if we look at the intraday charts on this, I think that you'll see it is actually more bullish than it looks. So the big chart in the middle is a 5-minute chart, and you can see that we were quite volatile today. Okay, but you can see we opened, we came down, we went up, we came down. Now when we came down here and we came down into the previous low, this dotted line right here, my charts automatically put that on. It shows me the previous day's low. When we came in down in here, I was like, this had better bounce here. If this doesn't bounce here, we're in big trouble. And you can see that this is kind of capitulation, right? And you can see the volume is coming up, and then we have the, you know, almost the highest volume of the day. Usually the first candle, you know, in the first few candles is the highest volume of the day, but this volume was very high. And then this started to turn green. And when this started turning green, this is when I actually posted in the Discord that this looks like capitulation. I can't remember exactly what I said, but I mentioned this in the stock market chat channel. What did I say there? Anyway, oh yeah, here it is. Market just tested yesterday's low and recovered from it nicely so far. So it was on its way back up, right? This green candle was, getting quite green. I also down here, when it started to bounce off here, right at about here, I sold the last of my puts, the last of my hedges. I closed them out here because I felt really good about this. So yeah, and we got a really nice move. We went all the way up into the pre-market high, and then it found resistance there. Chopped around a bit, everything's looking fine, and then I'm not sure what was if there was a reason for this decline. Wasn't very happy to see that. You can see that we found support right at the pre-market low. Bounced a little bit and then cut through it, and then we cut through this previous low, and that's when things started to get really scary for me. I thought, okay, this should not be happening, right? We bounced so nicely off this. The bulls like took control of this, held control nicely, and just couldn't hold it here. And I thought that this is it. This is what I thought that we could be like in serious trouble here, but they bounced again, and they bought it up strongly, continue to buy, and you can see in the after hours we're up some more. So this price action, the way the bulls came in here and saved the day twice and had really strong rallies is really quite bullish to me. So I think that the lows of today are very important going forward. And it would be really nice to see us continue higher tomorrow. So let's go back to the daily chart. So you don't get all that, when you're just looking at a daily candle, you don't get all of that out of it. There's a lot went on inside this candle. You look at this, you go, oh, not much happened. It went down a little bit, it came up, it closed where it opened. But a lot more than that happened today, and it's a lot more bullish than this looks. Now, if we can continue higher tomorrow and move up maybe into 400, the 400 resistance, or even get up near this gap somewhere in this area up here would be awesome. A little bit of sideways then, and then let's try and break through. But don't forget, we've got tomorrow we've got retail sales in the morning, so that's important. If retail sales are super strong, I could see the market coming down because that gets everybody's inflation fears up again. If retail sales are super weak, I could see the market coming down because then everybody's thinking, oh, the Fed is hit too hard. There's a recession coming and yada yada yada. So we kind of need to find a sweet spot with these retail sales, and then so that we can go up a little bit. And then on Friday we have the University of Michigan consumer sentiment. That's really important. How does the consumer feel right now? If the consumer is super fearful, that's not ideal for the market. We want them a little bit fearful because that works with the inflation narrative. And we also have triple witching or quad witching, whichever one you want to call it, on Friday when monthly options expire, index options expire, index futures expire, and single stocks futures expire. So that's always good for some volatility. It's usually good for volatility the week before and the week after, because after all these contracts expire, then beginning of next week, people start buying new contracts. And there's already, I'm hearing there has already this week been a lot of action in the options market. A lot of puts being bought and sold all week long, and especially yesterday, puts being bought yesterday. An awful lot of them, which is one of the reasons we came down so much yesterday. So I think, we're not out of the woods yet, but we're looking in pretty good shape to start a recovery here. And I think that big decline, may just be a one-day thing. We've got a really good shot at recovery. So let's keep our fingers crossed on that. So that's the SPY. Let's take a look at the Qs. Qs is a very similar thing. We should probably adjust our trend line in the Qs as well. Let's see, how does it work now if we do that? Look at that. Let's, this works beautifully off these lows here. So that again, bounced where it should have found support here, should have found support at this trend line. and sure enough, it did. But you know, again, just like the SPY, it's got work to do. There is a lot of resistance overhead, a lot of work to be done still, and we're gonna mark this gap in here.
She was going to get them even. She was going to get them.
Somebody needs to mute. PK, I'm going to mute you there. Perfect. All right, good. Okay. So that's the Qs. The Russell, pretty much the same. Russell didn't pull back quite as hard. It didn't come down into those lows down there. The other indices did. And you can see this candle on the Russell looks better. It looks more like a hammer. You know, it cut down quite a bit through yesterday's lows, but came back up, formed this little hammer. You know, we've got good volume through all of this. So, you know, liking what I'm seeing in the Russell, but again, you know, lots of overhead resistance and lots of work to do still in here. All right, let's look at the volatility index. So you can see that we've been watching, well, you know, we were over the weekend, I mentioned how, you know, how nicely this had come down and how I thought, oh, you know, it'd be nice if we came down and started attacking this gap and maybe come down and test the support at 20. Well, that didn't happen, obviously, this week because, you know, we did get the, where are we today? Yeah, okay, so this is Monday, you know, went up a little bit on Monday, you know, no big deal. But obviously yesterday, went up a whole bunch. It was really nice to see it though stall out at this previous resistance, and you can see today we came down a little bit. So that's good to see as well. So as long, you know, as long as VIX is below this 28 area, you know, I'm fairly happy. I would like to see us come back down and put in a lower low on this though. TNX, the 10-year yield. You can see that this you know, this has been moving up. It had a big day, a big up day yesterday. And today we, I guess it didn't really gap up, but it did move up a little bit. It came right into this previous high and then pulled back. So that's good. It did find resistance there. You know, we don't want to see this yield moving up. We're going to have a hard time, you know, equities are going to have a hard time going up while the 10-year yield and bond yields in general are going up. So, you know, it'd be really nice to see this roll over a bit, but it's got a ton of support down here too. If it does roll over, it's not going to roll over very far, I don't think. Let's take a look at the dollar index. You can see the dollar index yesterday. The dollar index had been rolling over, and it's kind of rolled over quite nicely. It got down to the 50-day moving average after cutting through that 21-day moving average. But then yesterday had a really big, strong day. This is, you know, one of the biggest days that I can see on this chart. You know, for, oops, there we go. Yeah, it's hard to find. I mean, that day, maybe that was a pretty big day there, but it's hard to find anywhere on this chart a big up day like this. So I did, you know, not what we want to see, right? When the US dollar is going up, you know, global equities are having trouble. North American equities are having trouble, obviously. And one of the reasons for that is that one of the things you might not realize is that a lot of the really big companies, and this is one of the reasons that a lot of the communication index companies, and a lot of the FAANGS, a lot of these really big tech companies are very international. You know, they get at least half their revenue internationally. So if the US dollar is going up, that revenue that they're generating internationally is worth less, right? Dollar up. You know, those home currencies in the other countries around the world, they're going down. You know, it takes more of that currency to buy a US dollar, meaning the revenues of, you know, all these FAANG companies, you know, Google, Apple, Meta, their revenues are actually coming down internationally as this dollar is rising. And this is one of the reasons that the NASDAQ gets hit hard and the FAANGs get hit hard when the dollar makes big up moves like that. And we saw that yesterday. I mean, some of the FAANG stocks underperformed the Nasdaq index. They were very, very weak yesterday. And we'll see. We'll look at some of those later. So that's our dollar index. Nice to see this, stalled out a little bit today. We want to see this, continue to roll down, right? And we can see here our cryptos are moving up today, so that's good to see as well because they had a crappy day yesterday. All right, let's go back over to these charts. I'm not going to look at gold. Gold was kind of lame. Silver might be interesting. It's almost forming a bit of a bull flag here, and it's looking way stronger than gold. So that is interesting to me because silver is also an industrial metal. So this is interesting. If you want to play in the metals market, maybe there's a bull flag there for you. I'm not going to play it, but some people are into that. Copper, not much going on, kind of messy. Should be finding support at the 50-day moving average, and you can see that the 50-day moving average is flattened out now. So this is good, because I mean all of these moving averages have been declining, and now we've got the 50-day flattening out and acting as support right now. It'd be really nice to see a bounce off of this, and also there's going to be some resistance up in here. I should probably mark that in. Make a move back up to resistance. We'll see what happens up there. Okay, DBC, the General Commodities Tracking ETF. That is, after breaking down out of its upward channel, has moved back into the channel, but we've got some really tight little dojis in here. I mean, you can barely see them on this chart, right? Look how tight those are. And we had a good recovery in that yesterday. Drew an almost like a hammer candle there, but it's still, this whole area is looking very indecisive. We need to see this move up higher in the channel again. Let's look at DBA, the agricultural commodities ETF, and you can see this one also poked out below, poked out the bottom of its channel, but has moved back into it. You can see it rolled over though before getting up near the top of the channel. And we definitely do not want to see that. And maybe it's found some horizontal resistance right there. So this channel might be coming apart here. This upwards channel. We'll have to see what happens. If this falls out of the channel, this could really start to decline here. So not terribly bullish on these agricultural commodities. Crude oil. And this, of course, is still where all the action is. Not necessarily in crude itself, but it has been, moving up. Did fine yesterday. It's not moving up very quickly, but we're, right at some minor resistance now and approaching this downtrend. So, and the downward sloping 50-day moving average, we're going to want to see that get through there quickly and go start attacking this 95 level. Natural gas, though, had a great day today. Really big move up. And it is, it's broken out of that base finally that we have been watching a little bit here. And it's, and supported by the 100-day moving average. And it's really nice to see that have a good day and move up. And it'd be nice if this got back up into here, consolidated a little bit, and then finally broke through. This is now, what are we looking at in this area? 1, 2, 3, 4, 4 attempts basically to get through this zone, right? And we're working now on the 5th attempt. So we're probably, and we're also coming into winter now. We're getting closer to winter. I think that this could be the move that takes it through. It may need to consolidate in here for a while first, though. So I think natural gas is the reason that a lot of these the subsectors within energy had a strong day today. You can see that this is XLE. This is sort of a very broad ETF. And it's forming a little bit of a pennant or triangle here. Sure looks like this is going to break out of there tomorrow. XOP, oil exploration and production. This has got this really nice upward channel. And this channel is working really well. It's supporting nicely here. I would be surprised if this didn't move up to the top of this channel before taking another break. The oil services ETF, this one's a little messier. It's still kind of mostly up, but pretty choppy and messy. So it's not really a space within energy that I'm playing in. I have, and some of the other people in the Discord have Magnolia Oil and Gas. This had quite the move down and has been recovering from this nicely and had a really good day today. Obviously, with gas moving up, natural gas moving up as strongly as it did, this is going to move up, and it's moved up right into resistance. I'd be cool with this just continuing on up. I don't need to see any consolidation under resistance on this one. I think this can keep moving. We will watch out for this 2540 level. The top of this consolidation could find some resistance there. EQNR is another play that we're playing in the Discord. This is the Norwegian natural gas, oil and natural gas company. Not as strong. Did gap up nicely today, but is having trouble holding above or getting above this 50-day moving average. I should probably be getting out of this one, but it just keeps trying to go, but it's having a tough time. 10 solar ETF. Still up near these highs. Finding a bit of resistance here. It's getting a little scary. That needs to break out of there now. So tomorrow, breakout out of here would be nice. I think that would be a playable breakout too. I think it could, if it can break out of these, let's actually get a line on that. If it can break out of that, it could get itself enough momentum to go right through that pivot high and right through this resistance that goes way back into the past, and keep on moving and maybe go and attack 100, which I think is not this 100 level is probably going to be fairly decent resistance for it though. Let's get that marked in. Okay. All right. So yeah, things looking good in solar. One of the monster stocks there, First Solar. This just keeps going up. Tough to get in something like this, but this is where the strength is, right? If you could buy any one of these little consolidations, and it's doing another one now, right? Little bull flag here. Problem is, it is now up so much. Eventually, one of these is going to fail and it's going to roll over, because this trade is no doubt getting crowded. Look at all the volume in this lately. This is definitely a crowded trade. So when this does start to roll over, people are going to be running for the hills. They're going to be taking their profit and getting out of this. You're going to see quite a strong pullback. So I'd be really careful if you're in this, and really careful if you're thinking about getting in it. Sunrun is another one that has been doing quite well, or fairly well, sorry. And this setup looks pretty decent. If there's a breakout in TAN and a breakout in First Solar, this might be the place to go, because this one isn't crowded yet. It's got this nice bull flag forming here. We need to adjust that. I pointed this one out on the weekend. I think this bull flag was only like 2 days old when I pointed it out, or when I first pointed it out. So just adjusting that. That looks a lot better now. Yeah, if it breaks out above there, and you can see this flag is right at a really old resistance, support or resistance level. Yeah, going back to last year, or well over a year now. If it can get through here, breaking out of here and get some momentum and move up through that 41 level, this could really get going, this thing. And, so maybe this is the next First Solar. So this is something that you want to keep an eye on over the next day or two, because it might be a nice little play in there. What else? XLY, consumer discretionary, had a terrible day. That was one of the 3 worst sectors yesterday. Massive gap down. And it was down, I think, close to 6% yesterday. But yeah, very unhealthy. has left this with a lot of work to do. Big gap here. So we'll just get that in. There we go. Had a decent day today, but again, it was so nasty yesterday. We really need to see this gap get filled and maybe some consolidation in here. Retail sales are going to affect this tomorrow. So you know, this sector, stocks in this sector are probably most affected by the retail sales number that comes out tomorrow. What else? Industrials weren't interesting. Financials not interesting. Tech. So tech again, massive gap down. One of the worst sectors. But look at this little, you know, support area here. This is good. This is, you know, this is a healthy little support zone as long as it's holding, you know. We do not want to see that break down. If that does break down, we're coming back down into this support level here. And we should probably get this gap in here as well. Because we're going to need to attack that. I wouldn't be surprised to see this come up and consolidate under that level. And communication sector. So, you know, this is where Google is, and I'm pretty sure that Meta is in this one as well. Now this today, so this came down yesterday, massive move down again, one of the three worst, if not, actually, I think this was the worst sector yesterday. This is the weakest sector yesterday. Came down right to this pivot. So this is, you know, becoming quite the support zone here. In fact, I should change that from pivot to major support now. And you can see that today, it came down and there we go. It came down, it went below there, and it came back up and just closed above. So that's good. That's, you know, that's bullish action there. It's a little scary, but it's bullish. But this has got to move away from this level. It can't be hanging around in here. It's got to make a move up a little bit and get away from this level. It worries me that this is going to break. I'm not sure how far down, you know, we go for the next support. You know, because we're in the levels from May of 2020. This is probably a minor support down here at around 49. Better support at 48, actually, I guess. Yeah, if that breaks, you know, that's the levels we're going to be looking at. I'm going to get those in. Because I'm not 100% confident that oops. Yeah, that's the one. That one right there, right off of that. Let me see how I, you know, found that level. If you look back during the COVID crash, we'll just zoom in a little here. Look back during, you know, to the COVID crash, we bounced right there, and then you can see there was some more interaction with that price a little later on. So that's what you know, gives me some confidence that if this does break down, that it will initially find support at that level. So that's our communication index. Let's take a look at some of the FAANGs. We've been talking about these a little bit in the Discord as well. So Apple. You know, I mean, Apple's just had a kind of bit of a rough time lately. This big move down, it had a really nice move up, and it only took a day to give all that back, right? Big gap down and big move down. Today, a little indecisive inside day. This is, you know, so this is healthy. This is good. It didn't continue down any lower. And, you know, this area is now looking like decent support. So we'll draw that in. There we go. You know, hopefully we can move away from this quickly. We're going to see a lot of, you know, sort of a lot of action like that. Amazon, sure if Amazon was interesting or not. You know, I know it's going to have that big gap down, right? Yeah, same sort of deal with Amazon. Looks like the indices and stuff. Meta, on the other hand, Meta is not doing well. Okay, so you know we have been watching this consolidation in this range. And I mentioned on the weekend how, this needs to continue to move up and go attack the top of this range, sort of this newer range. And get out of this older range. Well, it couldn't do that. And it really broke down, and it broke it down the bottom of the range, and it continued down out of the bottom of the range. Today, this candle is hammer-ish. It would be nice if it had a longer wick on it. Maybe this bodes well for tomorrow, but look at the volume on these red candles too, compared to the volume on our green candles. We got some nice big green candles here. The volume on these red ones is almost double that. So not looking good for Meta. I'm glad I don't own this. Obviously, it's in some of the indices, but it does not look good for this. However, that being said, if the market can recover here, if the market goes up, it will drag Meta along with it. It's just that this is a big underperformer, this one. So I wouldn't advise anybody to really be involved with this just yet. Netflix, on the other hand, we've been watching this one for a breakout, right? Now, obviously, it tried to break out on Monday. Obviously, gap down yesterday, but it held at the bottom of its range, and we had some green in here today. It tried to, it got up to the top of yesterday's candle. One of the few stocks that actually did get up to the top of yesterday's candle, but it did pull back a little bit. So Meta, to me, is still on watch. I still think there's potential for a play here when it finally breaks out of here for real. So I'm going to keep watching it, and I'll let you know when it breaks out. Google is one that was brought up in the Discord today. I think it was who was this? Sam L. Yeah, Sam L99 was asking about Google in the Discord, and a number of us commented on this. James, who is here with us now, commented. NS commented on this. I posted this chart. I was letting him, telling him that we were, and if you've been watching the weekend updates, that we've been watching this slightly upward channel that's going on here, and talking about mean reversion players, and how when it, gets to the bottom of the channel, you can buy it, and when it gets to the top of the channel, you sell it. And I was concerned over the weekend about this, how it came down to the bottom of the channel. It just didn't seem to be moving away as quickly as it had previous times. And I wondered, is this going to be resistance right here? Well, on Monday, that did turn out to be resistance, along with the 21-day moving average. It couldn't get through there. And then on Tuesday, obviously, we had the giant gap down. And we cut below this channel. And I have actually lowered this channel because, this channel used to be up here like this, right? And, with this, now this third touch here, I've had to, move the trend line down a little lower. So I wasn't happy to see it break down below here because it kind of breaks this pattern a little bit. However, it has printed a half decent hammer candle today, and that is generally fairly bullish. So if this can get back up into this channel, I'll get back on side with the bull camp on this, but this failure does not make me happy. And we really need to go up and break through this level before I'm really happy recommending, because Sammy was asking about this. I think more of a long-term play. But what we're seeing now is basically lower highs and lower lows. So it is in a downtrend. What is becoming an intermediate term downtrend. So we need to see that downtrend break. Okay, so let's get that drawn into. All right, so you can see this area here, really critical for it to get through. And if I were going to be buying this as an investment, I would actually want to see it get through that level before I went in, unless we see another really nice candle in here. Now, that being said, if you're really aggressive on this, you could buy on a break tomorrow above the high of this candle, and then maybe put a stop below the low of that candle. That's a perfectly reasonable way to enter this. And I see Shills has asked, can I check HD and CAT? And yes, I will. Just got a couple more little stocks that I want to get through, and then we'll move on to that. Let's see, Tesla's not terribly interesting. It had a bit of a move up today, and I think it gave it back. Let's see, semiconductors are pretty ugly. Hopefully holding at this support. And Microsoft, yeah, actually, yeah, we should look at Microsoft too. We shouldn't look at that while we're looking at the FAANGS. But yeah, we'll get into that one as well. Let's see, NVIDIA, nasty. NVIDIA, I think, broke down through its support. Yes, it did. We were looking at this little consolidation here, and that got ugly. Broke some support. So I'm not pleased about that. Let's see, healthcare, nothing interesting going on there. Utilities going higher. Yeah, so, utilities did pull back off that, from that all-time high, but had a pretty decent day today, although utilities are very defensive and, not the first thing we want to see moving up. I was talking about pins a little bit over the weekend. This has done quite well. You can see it did gap down. It's got, it is leaving a gap behind for us to fill. And we entered that gap a little bit today. Nice hammer here. There's a lot of talk of some sort of acquisition or takeover of pins. So that's one of the reasons that this is kind of holding up. With that much talk, I'm surprised it's not actually moving up more. But you can see lots of green candles here. This might be worth a watch. But I suspect that what's going to happen is news is going to break out overnight, and there's going to be a big gap up, and it just won't be playable. So if you want to take a chance, maybe buying some calls here, I'd buy yourself some time on these things. If you're looking for a YOLO, buy some calls maybe with 30 to 60 days, and you can probably go in around the 28 area. So you're not spending a ton of money on these calls. That might be a decent little YOLO, just in case this does. These rumors are true. They're real. I saw somebody in the Discord mention Celsius, and it has held up really well considering everything that's been going on. It did gap down, of course, but not that much, and recovered most of. Well, it basically engulfed that candle. Now, the gap is still there, of course, right? So it's got another day like this to go and fully recover what it lost. But, there is strength here. A buddy of mine was talking about a couple of days ago, talking about shorting this thing. And I'm like, are you crazy? There's just so much strength in this, and it has proven it again today. So, yeah, good stuff out of Celsius. All right. That's all I got. That's everything I wanted to get through. So if you guys want to, we're gonna start looking at your tickers now. Okay, so yeah, if you can, let me know what it is, how you want to play this stock. Is it long term, short term? Are you're going long on it? Are you going short? Is it just a trade? Whatever. If you can let me know, anything you're looking at. That would be awesome. And we will start with these for shills. We'll take a look at, we'll start with HD, Home Depot.
Yes, sir. All right. So I'm currently looking at doing some sold puts on HD and also I'm looking at a buy right strategy for Microsoft. So I wanted to get your thoughts on that overall. Is that a
okay
thing to play? Yeah.
So you're looking to sell puts on Home Depot. So you think that Home Depot is going to bounce here, correct?
I got a 260. I think sold put for October monthly.
Yep. Okay. Yeah, 260 is definitely a good place to have. Well, I would have actually preferred maybe you'd sold them at 255, because 260 is where the support is. But there's really good support there, so you're fine with the 260s. Just a little bit, close, right? Because they are right on support. But you've also got this level here. I guess that's probably like 280. There should be support in there as well. So let's get that line on. I think that's, but that has cut down through 280 though. So that's a level you're going to want to see it retake quickly. But yeah, I mean, this,
Perfect.
looks good. I mean, I think I think you're safe. And there's this 245, 246-ish area as well. Coming off of that level way back there. Yeah, 247-ish. So, all right, let's zoom in. Let's zoom back in here. Here's the deal though, right? Did you buy these today or sorry, did you sell these today or did you sell them,
Yeah, I just sold it yesterday when we had a nice, good red day with some juicy premium. So I was trying to.
Yeah, that makes sense. No doubt. No doubt. Implied volatility rocketed up yesterday and was probably still fairly high today. It scares me a little bit when I see people, buying or buying or selling puts, because essentially you're going long, right? So it scares me when I see people go long on a big day that basically gapped down and it closed on its lows. I would have been happier to see you do it today on this turn. And if we look in intraday, it probably looks like what I was talking about the indices earlier. Yeah, it did. It had that turn here. You can see where you had that capitulation, coming in. They just sold. And then it turned, and it turned green, and it started going up. Somewhere in here is where I would have said, hey, okay, now you can think that maybe this is going to go, turn and go up. And sure enough, it did. Like the market, it did have some weakness a little later on in the afternoon, though. So back to the daily here. I think you're going to be good, but this could get tested if the market does roll over. If the market doesn't like what it sees out of, for instance, how much time is in these actually? When are these monthlies or?
Yeah, I got the liquid monthlies. I'm hoping
September or October?
October.
Okay, so you've got a month in these. Yeah, it's a fair bit of time. So JPL can either be your best friend or your worst enemy, I think. Because we've got the FOMC next week on Wednesday. If the market can handle whatever happens there, I think you're going to be in great shape with these.
Okay. Yeah, go try to squeeze a little juice out of it and run. Yeah.
Yeah, and yeah, maybe and if this shoots back up, and I kind of have a feeling that a lot of these stocks that saw this really nasty move will move back up fairly quickly. If the FOMC is friendly-ish. Yeah, I think it'd be okay there. So let's take a look at CAT. So that is Caterpillar, obviously. Yeah, this one's messy. So what have you got going on here?
Yeah, same thing at 165 sold put.
Okay, that's nice and far away. So yeah, 160, 170-ish. Yeah, okay. So you got some support at 170. So around there. And a little bit in here. So that's around 160, that level. But this goes way back in time. I mean, we're going back to 2018 for some of these levels, right? This one, the 170, it's got more interaction up here. I'm fairly confident about that level. And what's COVID? Sorry, now over here. Okay. Yeah, so I think your 165s are safe. You've got this 170 here. You've also got this here. There's another level right here. This 180 is a pretty decent level too. So there's a lot of what's that one? 175, 175 too. So there are a lot of levels between you and current price. There we go. Which is great. When you're selling puts, you want a lot of different support levels between you and where you sold it. So I think you're okay there. But this is in a little bit of a downtrend. It's just a little messy, like so many other stocks are. But yeah, I think you're going to be okay on that one.
There's another one I just wanted to quickly mention. It's called TROW, and it's a dividend aristocrat. And I did one on that too. I forgot to share. That was a really highly, yeah, highly good one.
TROW is?
Yeah, I think the symbol. Yeah.
Never heard of this. Oh,
TROW.
I think it's T Rowe Price.
Yeah. Okay. Yeah. Okay. Wow. That's an ugly move down in this. Like that was relentless for quite a while. Huh.
I hope there's some hope in this one. It's a good dividend player, but
it's come down so much, and it's been trying to find some support. I don't like the big COVID spike down. I don't like doing trend lines off of it, but it might actually end up being relevant there. Let's get this end of this thing in the right spot, though. I'm going to have to zoom in a little here. Just bear with me for a sec. Yeah, okay, good. That one's good there. Okay. I usually like to see this, in COVID here, it had this spike, and I don't usually like anchoring a trend line onto the spike. I prefer it on the body of the candle. I think it's more relevant that way. But sometimes when I do that, I feel like I'm kind of curve fitting the thing, because when I do that here, it ends up being a lot more relevant over here, right? So yeah, I think we've got a decent trend line here. And we've got some decent support. There's a fair bit of interaction in this area. So, from around here, it's supported 100. I think we probably got some support there. Yeah, see, there is the support zone. I would tweak that one a little bit, perhaps, but this is just, it's good enough for rough for now. So, what's your put on this one? There's something there as well. A little bit of a pivot here. Okay. Yeah, there is definitely some support down below here. So hopefully the put you sold is 100 or less. Even if it's 105, actually, I think that we can be pretty confident that 105 is going to hold. But this is not a stock I would want to be long in right now. It's not really proving that it's ready to move up in a big way. It's looking, it's a stock that looks like it really needs to consolidate. All right, Microsoft. All right, what is some of this noise? Okay. I think you said something about calls on Microsoft, didn't you? Or a buy right?
Yeah, I'm looking at the buy right. but yeah, still learning the strategy. So I got to see how it works. But my friend says you always make money every time doing this. You know, I don't know. Yeah.
Okay, your friend's wrong. No strategy always makes money every time.
Okay.
And you know what? The strategies that have a really high win rate, when they lose big. And if you're selling calls, you know, that's an easy way to lose big. Now, so on a buy right strategy, we're in totally the wrong place for that right now. Or you're in the right place for the buy part of it, probably, if this bounces in here, right? Right now, this is just looking weak. It is into an area of support. So, you know, we should maybe expect a bounce, but it's not bouncing yet. And, you know, do you really want to buy a stock before it proves to you that it's ready to go up? You know, even if you're doing this strategy, right? So I'd be inclined to wait a little bit, see if this bounces off of here. If you're really aggressive, you know, maybe you just want to see it above Tuesday's high before you buy in, or maybe you want to buy in, you know, above today's high. But I think that's too aggressive. I think this, you know, needs to start proving itself to you, because it's still on a downtrend. Yeah, it's put in, you know, it looks a little bottomy, but when it tried to go up, it failed, right? And it failed right at this area of resistance and this gap and stuff like that. So the buy part of the strategy, wait for proof, and then the selling the calls part, you want to wait until you come up into some resistance to sell the call and see it start to roll over. So for instance, let's say you had been buying down here when this moved up and it came into resistance, and then you saw it start to roll over. And this is, you know, I mean, this really gave you a lot of clues here that it was potentially rolling over after it had gapped up. And this is totally an island reversal too, which is really bearish. I'll draw this gap and you'll see why. This is a really good example of an island reversal. So you can see we gap up, right? We kind of, you know, we go up a little bit, we spend some time up in here, and then we gap down, and it leaves this area here called an island. This is a very bearish pattern when it does this. And you can see it did get very bearish, right? It moved down a lot. So there's a little lesson on island reversal and you know, and how bearish it can be. It's a pretty reliable pattern. Now, this consolidation up here, so it goes up. You've had this run up. We had some consolidations. We gap up, and we start having trouble right from the get-go. And look at this, right at the 200-day moving average, we've got this tiny little indecisive candles, and it starts to roll over. This is where you want to sell those covered calls. When it starts doing this up here, great time to sell covered calls. And this one was so good. I mean, you could, you know, probably have sold the, you know, fairly tight at 300. And maybe even here when it gapped down, you could have sold some more. But I like this. I like this pattern when you're wanting to sell the covered calls. But no way you want to sell covered calls down here, because it should bounce, right? So this area, once it proves a good place to do the buy part of that strategy. Does that all make sense?
Yeah. That was super helpful. Yeah, thank you so much, Kevin. Yeah, that was awesome. Thank you.
You're welcome. All right. Let's for Punit. Hopefully, I'm saying that correctly.
Yeah, you are.
Oh, good. All right, let's take a look at Lending Club. Okay. I don't think we've looked at this in a while. There must have been some giant gap we were watching. Okay, yeah, that giant gap has been filled, so we'll get rid of that. That trend line is broken. I will just actually leave that there. And then we got kind of we got a small little, much slower downtrend in here. But still a downtrend nonetheless. You can see that right here. Okay. Yeah, this is definitely some support right there. Are you a bag holder in this along with me and many other people?
Yeah, but I definitely have faith in the company considering their, some of the fundamentals, especially in terms of EPS and I'm pretty long on the company, but I just wanted to, revisit some of the technical aspects of it.
Yeah. Okay, so it's still bottoming. It's not. It's good that this little low right here held through what's gone on the last couple of days.
Mm-hmm.
You can see, it's a bit of a hammer candle. That's kind of bullish. And there are some support levels below still. But this needs to move up. I think this company is just going to need more time to consolidate. And if like you say, if the fundamentals are still solid, this will come out of this. So, I think the lows in this are in, but I think it's just going to take time before this can really start to move up.
Right.
They're not in a space that people are confident about being in when they're thinking a recession is coming.
Right.
So, for me, I'm holding mine. I'm not going anywhere. There's no point in me selling it down here. And like you, I believe in the company long term. But I think we need to get it out of the other side of if there's a recession coming, or if we are in a recession, I think we need to get out the other side of that before we're going to see anything out of this. So, I'm totally cool. I expect to be holding this for, a year or two before I'm going to really see anything fantastic out of it, or see anything like these former highs.
Exactly. And do you think this is a good buy point for someone who's starting another portfolio? If they were to be long on the stock for, let's say, another 3 or 4 years?
Yeah, I think so. Because it is a decent base. You could definitely get it at a good price. For me, I like instant gratification, right? So I want to buy on a breakout. So
I think everyone does. I think everyone does. Yeah.
Because I think if you're buying it now, you've got to live. You're going to have another probably couple of months of consolidation in this zone. It may not ever see this 1250 price again, but it may not go any higher than 13 or 14 either.
Right, exactly. That's what I'm thinking. So there's the opportunity cost to that, right? Like, because there's so many other opportunities that are gonna give me that instant gratification. Like Starbucks was one of those today. And I was like, crap, I should have bought that a couple weeks ago. And instead, I was like, still holding on to my money. So I'm sitting on a decent pile of cash, and I'm kind of contemplating a few plays.
Yeah, if you have cash to deploy, you could probably do worse than this, but I think you could also do better.
Right.
I think this one's going to give you time. So I think just be patient with this one.
Right. Yeah, I appreciate that. Yeah, that reaffirms some of my beliefs.
Cool.
All right. The next one's PLBY.
PLBY.
I think it's gonna do the same thing. Let's see the charts, I guess.
Okay, so it broke down through that pivot. Let's just grab that and move that down there. So interesting. It didn't do too bad the last couple of days. But I'm not happy it broke below that level. I'm gonna draw that in because it seems like it's sort of acting as resistance on the way back up as well.
Okay.
This is everything on this chart says this is going lower.
You're right. Yeah, I don't see any consolidation whatsoever, but I wanted your confirmation on that. Maybe I was missing something.
Yeah. It's not, you know, I mean, it looks like the move down is slowing.
But it's still coming up. Like it's
Yeah.
it's not stopping, right?
Still
Yeah.
all lower highs, right, and lower lows.
Yeah. Yep.
So until it can put in a higher high and hold it, like, you know, it looked like this one was going to be the one, right?
Yeah, and then it did.
Those two highs, and then that one fell apart.
Yeah.
You know, so now we've got this one. We've got to go up. We've got to put in a lower low and go confirm it with a higher high here, and then we got to get above this high. So until that happens, we should expect more downside.
Yeah, I have one more that I forgot to mention. That'd be JP Morgan Chase. That's also something that I'm considering as, you know, potentially a buy entry right now.
Yeah.
And it's certainly, I think, trading lower than it historically does, and I consider them to be not just, you know, a bank but in a fintech in a lot of ways. But that's just, you know, I'm speaking qualitatively, so that's what the charts say.
A friend of mine, I'm sure he doesn't mind me mentioning, James. He's on the call. He's in here with us now. And he's James Hawk in the Discord. He likes this. So he can. You guys should maybe in tickers you're watching or something like that, get a little conversation going on this. Share your ideas about it, because I'm sure you both have good ideas on this one. For me, I don't. From a technical standpoint, I don't really see what James sees in it. There are other financials that look better technically. But again, this is another one of these stocks that's putting in a good, decent base, right?
Right.
So we had this downtrend and that broke. So now we can probably, adjust the trend line to here, for instance, right? And you can see it tried to poke above that and it came right back in. So that's not terribly bullish. It's having trouble. So it's got the kind of, we've got this high here, it's basically a higher high, almost have a higher low here, but we were unable to go up and make another higher high. So we're still mostly going sideways. So this kind of says caution. It's not quite ready yet, but it looks like it's getting close to being ready.
Right.
So this is one where, if you're really itching to pull the trigger on this, maybe if it can come up through, if this could hold a couple of days, you see the 100-day moving average here, this one?
Right.
If it could hold a couple of days above that, maybe that's a good time to buy.
Right.
It got up there and there's 1 day above, 2 days above, and then it kind of, wasn't looking great. And even the second day above that 100-day moving average wasn't looking great either, right? And then you can see we moved above again, and it got 2 days above, and then it fell apart. So I guess what you really need to see is 3 days above that.
Right.
Or it looks like it has continued strength once it gets above that.
Nice. That's good insight. I didn't think of it that way.
Yeah. That might be a good buy signal.
Right. Yeah, that's my whole strategy right now is like portfolios are not terribly spiking up at the moment, especially with LC and one of my bigger holdings being LC. Thank God PLBY was always speculative, so I only did a really small portion of my portfolio there. Yeah. But essentially, I'm holding on to cash and then getting it ready to be deployed in some of these longer term plays that will break out and kind of even out my portfolio and then accelerate it further. Essentially, that's my game plan. I'm still very new into options, so I can't really do covered calls or anything. So I got a long way to go in terms of fully being confident in myself to pull off those strategies.
Right.
So right now I'm usually a long-term investor, so it's like I'm almost sometimes a set it forget it kind of a guy. So yeah, so deploying cash is the next step here.
Yeah, so I mean, you know, an option strategy that might work for you. So if you're a long-term investor, obviously you like researching the companies, you like doing, you know, looking at the fundamentals and everything. A good option strategy for you would be buying LEAPS. And
Okay.
JP Morgan might be a good one to buy LEAPS in. Let me take a look at something here. I'm just, oops, no, that's the one. I'm just pulling up a website. So I can show you something.
Yeah, I was doing the same thing. Yeah. I think I didn't want to mispronounce the abbreviation, but yeah, I think I've heard of this before. It's like not like the short-term options plays that you usually see, and it's covered in a lot of ways. Okay.
Here's a website I use for looking at implied volatility. So
Okay.
the key thing with buying LEAPS is that you got to have implied volatility has got to be low. If implied volatility is high, then you're paying a lot of money for those LEAPS. And because when you're buying LEAPS, I guess I should have explained what LEAPS are. LEAPS are generally call options, although they could be puts, but they're options with at least a year to expiry, and more often like 2 years to expiration.
Okay.
So there's a lot of time in there, and all of the value in them is generally time value, right?
Okay.
So when implied volatility is high, that time value is very expensive. So those LEAPS are expensive. So you do not want to buy LEAPS in stocks that have implied volatility. Now, when we look at JPM here, if you look right here, okay, it says IV rank 75%, and it tells you it's elevated, okay? So that means that 75% of the time over the last year, the implied volatility was lower than it is now.
Okay.
Okay. We want this number, if we're going to be buying LEAPS, we want this number to be very low, like, 25% or lower.
Okay.
Gonna buy LEAPS. And so if that's all you know about buying LEAPS, it's going to do wonders for you. Okay.
Okay.
Make a rule. I'm not going to buy LEAPS in anything if it's higher than 25% implied volatility.
That sounds simple enough. Yeah.
Yeah. Okay. Good.
Good.
And also, understand, do a little bit of research. I've actually done videos on this stuff that are in the session recordings. If you look way back in time, I've done some options videos where we talk a lot about implied volatility rank and how it's different from implied volatility. So that's stuff that's important to know if you're going to be doing LEAPS, or really if you're doing anything with options, because anytime you're trading or investing in options, you're really trading volatility.
Got it.
So yeah, familiarize yourself.
Yeah, that definitely makes sense. Thank you. That's because I think I gotta get started in terms of covering myself whenever the market takes a nosedive, or whenever there's so many other ways there's opportunities to make money, right? And just having your money sit on equities is not it's not always going to make you money.
Yeah, for sure. Options are a great tool. They can be really helpful.
Thank you.
Yeah, so if you have any questions on those, there's the option channel in the Discord. There's lots of great information in there already, and there's lots of people who are willing to answer your questions in there, myself included. So yeah, don't be afraid to ask questions in there.
Yep, we'll do. Thanks so much. Yeah.
Welcome. Marion D has asking about SPY puts at 401 and 392 expiring on the 16th. I'm assuming expiring Friday, the 16th of this month, not October. So let's take a look at SPY again. are you long the puts?
Yeah.
Okay, so you're in the money on the. Well, you're in the money on the 401s.
Yeah, but I'm not in the 392.
Not the 392s. Okay.
So when it got down, I thought it was gonna break, and then I bought again at the 392.
Okay.
But then it's reverted.
Okay.
Well, it hasn't gone back, so I'm still holding. I didn't close out the position because I saw that it didn't take out yesterday's low.
Yeah.
So I was holding, but instead of, I wanted to just verify what you think about it, to keep my hands on the on my in the morning to get out quickly, or it might break.
I kind of wish you had gotten out today. I'm not sure if you were. I don't think were you here earlier when I was talking about.
No, I got in late.
Okay, so because I had a bunch of puts. I had puts on the Russell. So I bought puts on the Russell on Monday. I think it was Monday. Somewhere up in here. Because I just had a bad feeling. I wanted to hedge. I was basically hedging, right? Hedging my portfolio, and I sold some of them yesterday, and I sold the rest of them today. And I'll show you. I went over this. I'll just do this really quickly. I covered the last of my puts right here. This is now a 5-minute chart we're looking at, right? So right here, and around 10:30, when this started to go back up after coming right down here, that's where I covered the rest of my puts, because this was very bullish to me. That we capitulated, we started going back up, and I thought, you know what, we're not gonna break down. I think we're gonna recover from this without having a really big move to the downside. Now I could be wrong about that. But you don't have much time left. You've only got 2 days left in these. So, you know, if tomorrow if it starts moving up tomorrow, those 392s are going to, you know, become almost worthless very quickly. And the 401s are going to start giving back, you know, some of your profit. So I would like to see you get out of these as soon as possible.
Okay.
I think we're going higher. You know, we've supported in here where we should have found support. You know, and I really think there's going to be a bounce tomorrow. But another thing I talked about earlier in the video, so you might want to actually go back and watch the recording, and watch the beginning part of the recording when I'm talking about SPY and the markets in general. We've got the retail sales number tomorrow. And that's at 8:30 before the market opens. The market is either going to go up or down on that number. That's an important number. So if the market's going down, then yeah, hang on. But if the market's going up, you should get out right away. As soon as the market opens, you probably want to get out of those puts and take your profit on the one and you know, if there are losses on the 392s, just, you know, cut those losses short, right? Does that make sense?
100. Thank you. Appreciate it.
Okay. Yeah, you're welcome. Okay. Is there anybody else who has anything they want to look at? Okay. All right. Then in that, for Jess, we want to look at WWE. I think we've looked at this before. Wow, look at this uptrend. I'm not used to looking stocks that are in a big uptrend.
Right. We did look at this before, Kevin, and I've just kind of been watching it. I know nothing about the fundamentals really, except for what is on like Stock Unlock.
Okay.
But I'm just surprised, like, you know, this stock has just kind of been going the opposite. Like, it feels like it's kind of been doing its own thing.
Yeah.
I just wanted to see, like, it's kind of fallen down close to like this trend line.
Yeah.
And I was thinking of maybe just buying a small position just over there, and I wanted to see what you thought about that.
Yeah, I think so. I think you buy above today. If you're not in yet, you can buy above today's high. You can buy above that high there. But you know, yeah, because I mean, what's happening right here. Actually, here, let me do this. Oh, not that. Okay. All of this action right here is almost identical to that action there, right?
Right.
It came down, it went up, it came back, it tested it again, and then it went, right? So it's come down. It broke through a little bit. I mean, that one broke through a tiny bit. This one broke through more. But, you know, it came down, it went back up, it's come back down.
Yeah.
Is that the test? Is today that test?
Yeah.
I kind of think so. I think tomorrow is going to be another update for this. And
yeah, I think so too.
I mean, this trend is clean.
It is really clean, yeah. And then I know you recommended a book for me like a couple months ago. It was Mark Minervini.
Yes.
And he talks about like a lot of times, like for example, Celsius, when a stock kind of moves up a lot, that scares a lot of traders away to not buy something.
Yes.
But he argues that's kind of like when you should consider it, probably. I mean,
well, yeah, no, this is definitely see, Mark Minervini would be looking for a place to get in. He might be trying to get in here.
Yeah.
That might be, but see, this hasn't really shown a lot of strength yet down in here, right? He's probably seeing this, and then he's trying to figure out where to get in. He might get in kind of in here, you know, that might be him right there on that big green candle getting in there. That might be a place he goes in. He might wait until after this bounce here and it starts moving up, and maybe he's getting in right here. But yeah, he definitely likes to see things in a confirmed uptrend before he gets in them, right? He's generally not trying to buy the bottom.
Yeah, yeah.
So what do we got? We got like there's a push up, second push up, third push up. So this has already had like basically 3 good legs up. So it is getting a little mature.
Okay, I guess that's the reason why I brought it up, you know, like, what do you think now? Because it's kind of had, like you said, it's this beautiful uptrend. You think it's a little too far?
So it's still below. Yeah, so there's some resistance right there.
Yeah.
Put that one in.
And I have that resistance at kind of around that area that you're looking at right now. And I'm thinking, like, if it breaks through that strongly, that would be pretty bullish, right?
Yes, absolutely. It's going to be right about there. Then, of course, you know, we've got some other levels, you know, farther up, of course. Let's go actually back. Let's take a look back at these. Zoom in a little closer on these. So then, yeah, we're going back to what, 2017, 18 to get some of these levels.
Yeah.
But yeah, that one right there, that looks about the right spot. So that's what does that say? 77.77. And then this one at around 92. What a coincidence! 92.77.
Wow.
You know, in that area, and then obviously 100. I mean, the 100 is the all-time high on this, right? So yeah, we'll want to watch out for those on the way back up. They're actually not too far overhead. But you know, I see no reason why this wouldn't continue higher.
Right. Yeah. I mean, that's what I'm thinking too. But again, it's like it's just one of those. I don't know if you remember last time. I don't know anything about WWE, but I know like my nephews are big fans of it, and I know people who work in entertainment. They say business is doing good, so it's all hearsay.
Yeah.
But I figured, you know, maybe it might be worth just a small position. Plus, I'm sitting on a lot of cash right now, and I'm like, I haven't bought anything for a long time. I guess I'm getting kind of antsy too.
Right. It even pays a dividend, 12 cents, 12 cents every quarter. So it's not a ton. I mean, it's a small dividend, but
yeah,
it's there. What is that? That's dividend. Yeah, dividend yield is only 0.7%. So yeah, very small dividend. But I mean, you know me, I like buying strength, right? And I was talking. I don't know if you heard earlier. We were talking about for Punit, who was thinking about adding more to LC.
Yeah.
And then and we're talking about, well, maybe there are better opportunities. Maybe you can find something that's already moving up.
Right.
It's that bill, right? There's lots of support below. You've got the 100-day below, that's acted fairly well. You've got the 200-day down there. If it does pull back and come down, it's probably not going to go far. There are lots of levels below this. Lots of places you could draw lines, for support. Here at 59, you can, right here at 54, moving up a bit, this pivot low right here, right? Yeah, there should be tons of support below. So I guess your risk here is obviously this company is fundamentally good, or it wouldn't be going up like this.
Yeah,
it's a solid company. There's no doubt about that. So the risk is something changes, fundamentally. Which that's your risk in any stock, right?
Yeah, it's true. Very true. Yeah.
So you probably do. I mean, if you're throwing a chunk of money at it, you probably do want to research the fundamentals a little more.
Yeah.
But just based on the technicals alone, I mean, this looks decent. This looks like a decent place to get in.
Okay. Solid. Appreciate it.
No problem.
And I don't know if you have any more time, Kevin. I know you've kind of been chatting a while already, but
yeah, I got a little bit more left in me. I'm starting in my throat. I got a little bit.
You talk about being a momentum trader.
Yes.
A lot, right? And I know that's kind of like your style, instant gratification, like trying to find those consolidations. What do you do when, like, I guess I'm trying to figure out what do you do when there's like not a lot of setups out there? Is it just wait, or are there other ways?
You wait.
Yeah.
Wait to try and find setups. What I've been doing is I have shortened my time frame a ton.
Okay.
Like I used to day trade. I used to day trade almost exclusively, right? And then over time, I slowed my time frame down and became more of a swing trader. And then my style became even much longer term swing trades. But over the last year or so, I've really shortened my time frame. My swing trades have gone from what I want, to be many weeks to, gone to, I'm happy if I can be in a thing for a few days, a few days to a week, right?
Right.
To now, it's sort of like, I'm day trading a lot more than I have in a really long time. And just getting in and out because breakouts are failing. Things just, the swing trades I'm trying to get into just aren't working. But the day trading is, I can spot levels and turns intraday, and make some money doing that. So, what I'm doing now, if you don't have experience day trading,
Right.
In some ways, this is a difficult market to learn day trading. In other ways, not. But I mean, again, you just got to look at the intraday chart of things to realize that it's tough.
It is, yeah. I mean, I've read some books on it, like what's that book? One Good Trade.
Right. Like Bellafiore. Yeah.
Yeah, I thought it was a great book, and I thought it was very insightful. But it was also kind of just like, that's not I don't know if that's my style. I feel like a lot of it is trying to figure out what I could picture myself doing, because those guys are hardcore. They're like every day.
Yeah. That's what's really important is you've got to find a style that suits your personality. and your commitment to it, right? If you want to day trade, you've got to be in front of the screens most of the day. You've got to be. You should be starting, and about an hour and a half, at least an hour and a half before the market opens, trying to find what are the plays today. You're looking at that pre-market action and seeing what's moving a bunch, right? And then coming and making a short list and doing quick research and everything. Well, that takes at least an hour and a half. Then the market opens, and then you're there for the first hour and a half or so. Then you can take a break for a couple hours, and then you come back for the close, right? So you don't have to be, if you've got trades on, then you're gonna stay there in front of the screens. But usually, what happens is, they start going sideways midday, and you get out, and then you come back to play the close, and then you get a move like this into the close, right? You're waiting for that move to happen in the close, and you're trying to play something in the morning. Now here you would have just got chopped up. This stuff isn't. You wouldn't have made a lot of money on this. There may be some triggers in here, but you might have, if you've been watching this all day, you probably would have bought this probably on that candle or that candle, and made a couple of bucks, scalped a little bit in here, right? But that's the best you could have done in WWE. But this wasn't a good play today. This is not the stock to be playing, right? What were some of the others that I remember? I don't know. I mean, we'll just go back to SPY because it's a really good example. There were nice setups in SPY, but the problem with trading SPY is all of the best traders are in here. So do you want to learn day trading against all the best traders?
Yeah.
You want to go find some little quieter stocks, some easier stocks. But this one was cool. This move right here, as I was watching it on a 2-minute chart, actually, let me go to the 2. Because it can be there's really good example here. Let's just back up. So, so we had the open, right? We come down to the open. We go up, we chop around, and so really all of this is just chop, but you've got this consolidation, and once you see this consolidation, maybe you go short right in here, because lots of people are going short, and you can see this red volume is increasing, right? And it comes down fast, and volume is increasing. Now we're getting, this is really high volume in here, and you get this candle and coming down into, you can't see the label here. This dotted line is the previous day's low. Okay. So my charts. So I marked out here. See the pre-market low. I marked that one in the morning. But a lot of these levels, a lot of these lines go on the chart automatically, and this is one of them. This yesterday's low is one of them that goes on the chart automatically. So I know this is coming into yesterday's low, and I'm thinking they're capitulating. Look how much volume is here. They're panicking selling this thing, right? They think it's going way, way lower. Traders are going to start buying yesterday's low. It's a logical place for this to bounce. So I'm waiting to see, does this bounce here? And sure enough, it cuts through and instantly, and this happens fast, right? Instantly starts moving up. So now you see this turn green, where we had no green whatsoever in here. Well, actually in here, there was a little bit of green, but once it broke down through this level, and this S1, by the way, is a line that I put in the morning. I put that line in pre-market, and it's based off of, price action from previous days and whatnot. And it's nice to see when it supports there. And when this was coming down, you can see it supported again right there, right?
Yeah.
But not for long. And then it really fell apart. So these candles are just red, 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 red. This one starts to go green at a logical place. So you start buying.
Right. Yeah.
For me, this is where I covered the last of my, I've mentioned this 3 times now.
Yeah, your shorts.
Yeah.
I mean, I would too.
And I didn't actually start going long until a little later. I wasn't that confident in it. It's hard to flip from short to long like that when you've got a short position on, and then flip to the long side right away in the same move. I've done it.
It's like a lot of mental gymnastics too. I feel like
it's really rewarding if you can do it, and you can see how rewarding that can be here, right? Because this is a move that really can make you a lot of money. You know, you go from, say you're getting in at like, you know, 392 and a quarter, and it peaks out, and you're probably getting out, say here, right? Although you're probably selling some on the way up, right? But you're getting out the last of it in around here at 395. So that's 3 spot points. That's pretty good.
Yeah. I mean,
so,
I'm tempted to try and day trade. I have the 3-minute chart on all day, and I'll see things, but I'm just barely, you know, I jumped onto the Magnolia trade specifically, not really to make so much money, but just kind of like to learn alongside you guys.
Right. Oh, cool.
Yeah.
I bet you the Magnolia would have been a good day trade today. I didn't look at it much intraday because, you know, it's a position trade for me, right?
Yeah.
So we're looking at a 2-minute chart here. Yeah, I mean, look at this. It gaps up and just keeps going. Hard to get in those when they do that. But what you might want to watch for, so when it does that, right? And then you probably draw lines on this bull flag. I don't know what this gap here is, though. That's kind of weird. But you can see there's a bull flag here, and you would be expecting that to break out to the upside and probably thinking about going long on that. But when it breaks to the downside, you're like, ooh. And that's probably why, you know, that's probably why it gapped down and it continued down quite a bit, because that should have kept going up. Yeah. So, you know, some people went short on that. And then once this got back up above VWAP, if you are thinking about day trading and very short-term trading, you want to get VWAP on your charts, which is volume-weighted average price. So it tells you the average price so this line is the average price somebody paid up until this point in time. So when it gets, and this is something that all day traders use. So once it breaks back above VWAP, that's another good time to buy. And, you know, you could have got some more out of that.
Yeah.
And it did break down later on. I'm not sure what's up with that. And it didn't really, I guess it gave you a little bit of a consolidation before it broke down. But these are the patterns. So if you're staring at charts, right, intraday, or even going back and looking at the end of the day, look for when, you know, look at this, go, okay, yeah, I could make money in that. What happened leading up to this going down this much? And then look back and go, well, there's kind of some fairly tight sideways action here before it broke down. And look at what the volume did. Now, this one doesn't trade a ton, right? You know, in the average 2-minute candle is only trading 2,000 shares, right? So the volume is kind of all over the map on this, so it's not the greatest example. But if you are going to teach this to yourself, you know, look for moves that you could have made money in, and then look and see what happened before it.
Got it. Okay.
Look for a pattern.
Yeah, even same goes for even longer term trades, right? I would say.
Yes, absolutely. Yeah. Yes, on the daily
charts are like you said, they're fractal, right?
Yeah, exactly.
Okay. All right. Yeah. No, I've never thought of it like that, but that makes so much. It's like so obvious. It makes a lot of sense, right?
Sometimes the obvious stuff is the hardest stuff to learn.
Yeah.
What was I going to say? Yeah, try not to come up with too many of these. Find some, you know, commit some to memory, and then look at a bunch of different stocks. And if you see that consistently, then really commit it to memory. And then just start playing around with that one pattern, and make that your one pattern. When you're consistently profitable with that pattern, then maybe you can look for another one to add that in.
Right.
So this is what Mike,
like a playbook.
Exactly. I was about to say, what Mike calls playbook, right? And it's building a playbook.
Yeah.
And it starts with, this is why we all say, you know, I don't know if he invented the term looking for stocks that are in play.
He did. I think so. Bellafiore
does that all the time, right?
All the time, yeah.
You know, so that's what we do in the morning. We look for the stocks that are in play, and then we watch those, and we watch for these patterns. We watch for our favorite patterns, you know, during the day.
Okay. Yeah.
Draw a bunch of lines all over the chart, you know, like I did with, you know, SPY and everything. And we want to look for these levels. So for you, you know, I mean, your charting platform probably can't do this automatically, but it's important for you to know where the previous day's close is. That's what this blue dotted line is, right? I'm marking the previous day's low. I'll mark in the previous day's high. That's this green one here. What else am I? The previous day's open is sometimes a level that works. The pre-market high and low. This one doesn't trade at all in the pre-market, right? But usually, if a stock is in play, it'll be trading in the pre-market. And so you want to look at the high and low from the pre-market. You also want to look at any important support and resistance levels that set up during the pre-market, because they will come into play again, you know, through the day.
Throughout the day, right?
What else do I watch? Oh, I've got a thing that automatically, if you look at this little 5-minute chart down here,
Yeah.
this automatically marks in the first 15-minute range, which is this pink line. Okay, so the purple and pink line will overwrite each other, right? So here's the bottom of the first 15-minute range, and here's the top of the first 15-minute range. Quite often, things will happen if it breaks out of that level. I also mark in the first, and again, this does this automatically, right? This little does this, but I mark in the first hour's range in there as well. Now in this one, it didn't work very well at all, but these the first 15 minutes and first hour, breaking out of those levels can lead to fairly large moves sometimes.
Okay.
Not all the time. So that's something I would suggest you look for other patterns first, but that sort of thing, that can be a little bit of an edge that you can add in later.
Okay.
So
cool. I appreciate it. Yeah. I mean, definitely working on recognizing patterns. I guess like the ones that I'm working on is, you know, just your typical bull flag. And that's what I've kind of been trading for the last, you know, first half of this year, I guess, you know, or second quarter.
Yeah.
And, you know, like just trying to be patient, trying to figure out where, you know, put my stops and things like that. Like last time you mentioned, I put a stop that's too tight.
Right.
And I lowered it and I was able to stay in Magnolia. If
Nice.
I had put it where I would normally do it, I would have been stopped out for sure.
Right.
Yeah.
Well, that's good. Good. Yeah, this is tricky with the stops, but at some point you've got to have them, right?
Right.
Especially with day trading. You know, the stops become even more and more critical as shorter your time frame gets.
Yeah. But it's the same thing happening, just faster, right? Like same setups. Okay. All right.
But people can get themselves in trouble, and they can, you know, with more so with day trading than swing trading, people can go on tilt. You can start over trading. It's really easy to start over trading. You've got to discipline yourself to only take those best setups. I think Mike calls them the A+ setups, right? You got to look at this and go, is this an A+ setup? And maybe we look at this flag in Magnolia, okay, like, you know, definitely a bull flag there, right?
Right.
But what do we know about bull flags that slope upwards?
They are prone to breaking. Yeah.
Exactly. And what happened with this
one? Failing, I mean.
Yeah, to failing. And what happened with this one? It failed. So maybe, like, you know, I don't watch enough intraday bull flags to kind of know what percentage of these things actually fail. But if you see this upward sloping bull flag, and maybe here you see this red candle develop, or you might even see it there. Okay, it's coming off the top of the bull flag. Maybe you go short here. Maybe that can be your signature play, right?
Oh, I see. Yeah. Nice. Yeah.
It's like, yeah, upward sloping bull flag, high failure rate. I'd want to short the top of that bull flag. And then you get lucky once in a while and you get a move like that. And you're in early on that move. And then your stop. So this is easy to do because your stop is like right here.
Yeah.
Risking a few pennies.
Right.
And so if you went short here, say you went short at 24.19, your stop's going to be at 24, 25 or 26 or something, maybe even 24. You're risking 6-7 cents, and 24.19. If you come down into here, once it starts to slow, then you're probably going to get out around here. That's 23.84. So what are you getting? 35 cents out of that?
All right, that's pretty sweet. Yeah, not bad.
It's a scalp, but
Yeah.
it's a nice little.
But I like that logic. It's not, you don't have to look at it the way that like the textbooks teach it, or
Yeah.
yeah.
Just use your imagination. Come up with your own thing. That's important too. Try to do something different. That other people aren't doing, right? Because if you're doing the same thing as everybody else, it can be difficult. Because you're getting in on moves that they get in. Everybody else sort of gets in. They take their profit quick or whatever, right? Here maybe you're getting in on a move that other people aren't. Well, obviously some people are getting in on this move. Some people just saw a little formation happening here, because you can tell that there was a seller, because these red candles are big.
Yeah.
But that's what makes this third one right here. That's what makes this one so juicy when it comes back up there, because by then you're maybe drawing that line up there, and you're maybe looking for it to fail here.
Got it. Cool. Well, I mean, thanks again for your time, Kevin. Appreciate it. Hoping to keep you too long, man.
Yeah, we should put this down. And if anybody has watched this far in the video,
yeah,
what does Matthew say? You are the real MVP. Right?
You are the real MVP. Right. There you go. Oh my God. That's why actually I saved my question for the last, because I know I kind of ran a bit.
Right. That's cool. No, it's good. I really enjoy these conversations we have as well.
Oh, thanks, Kevin. Appreciate it, man.
It reminds me about some of these little patterns that maybe I haven't played in a long time, right?
Yeah.
Cool. All right. So I just we'll go over here. What do we got coming up? We're going to look at what we got coming up. And of course, we got the recordings for the briefings on the weekend, and we've got ticker talks every Wednesday this month. So be looking forward to seeing everybody there, and thanks for watching. And yeah, if you have made it this far, let's give this a big thumbs up, and we will see you all again next week. And have a great night, Jess. And
all right, man. Kevin, peace. And everyone.
Thank you.